Lower low, lower high today versus what, Wednesday? Had the day off in honor of Jimmy Carter, his passing here recently. Hats off to them. But we're back at it today, Friday. Nvidia is showing lower lows and lower highs versus Wednesday. 15 and the 63 day moving averages lower as well, or yeah, right at that neutral point. Seeing a decline RSI, MACD, blah blah blah. Nvidia came out with some great product introductions to new products at the electronics show. I guess it's been renamed. 2-hour presentation. I know one of my colleagues has spent hours listening to it and what they're doing. Nvidia's just bringing more to the table. They're reinventing themselves every day. That's what a company should do, right? Totally. Volcom, skate and snowboard industry, reinvent yourself. That's what they've been doing, right? That's why companies stay around. The difference between what they're doing and the stock market is heavily influenced by volume, volatility, and economics. And what we're seeing is a rolling over of the Mag 7, which represents 40% of the S&P movement on a daily basis. 7 stocks, 40% of the movement is contributed to 7 companies. So if any one of these shit the bed, wow, it could take down the S&P, the NASDAQ in a heartbeat. And I think that's the thing we got to take into account, even though Nvidia is coming out with some revolutionary price point products that's going to change the game when it comes to how we do things using artificial intelligence, they went back and upgraded the gaming side of it. That's what got them in the business, right? So they're paying attention to that. But that's not the market. That's not the economy. And we have to put some attention to that because it is what algorithms trade off of. They're looking for news events. They're looking for headlines. They're looking for job numbers. February 7th, they'll come out with the adjusted second quarter of 24 job numbers. Well, if you remember the last time they did that, for first quarter of 24, they revised them down 881,000 jobs. They missed it. Their calculations missed it by 881,000 jobs. Can you imagine what second quarter is going to look like? Chances are there's no revisions up. So how does that affect the market? How does that affect Nvidia's stock price? It's going to affect it. It's going to have an effect on it. One way or another, up or down. You look at the implied volatility, premiums, they have been coming down, which means people are paying less premium for put contracts in the short term versus history-wise. So today's implied volatility versus historical implied volatility, it's coming down. Well, that's, if you think in a reverse standpoint, that means people are less spending money on protection. You take a contrarian standpoint, that could be a bearish sign. So these are little things you figure out after spending 26 years of staring at this stuff. But what I see is if you just look at a chart, this general humpback, we're over this bell curve, we're on the right side of the bell curve, and we're starting down. Now, where does it go? Well, we have 134 on the downside today for today's low end projection, 143 on the top end. So in a daily standpoint, and pre-market already has it at $139. So What that says to me is there's probably more downside risk than the upside return. If I'm looking at sort of the intermediate term standpoint, 119, 115 area, the teens could be where we're headed. This doesn't mean anything about Nvidia. Doesn't mean they're not going to change the world. They're not on pace to provide affordable tools that you and I can use to revolutionize our daily lives. It just means the stock market is overvalued. It just means that we've had a hell of a run for 2 years, S&P over 20% year over year, for 2 years straight. A third year hasn't happened. So you have to ask, what is the catalyst that would actually cause it, the S&P in this sense, to be over 20% this year? The economics aren't lining up to support it. We don't have a flood of money showing up in your mailbox anymore like we did during the pandemic. Real estate prices aren't supporting. I'm seeing reductions in my area every day, $2,500, $25,000, $100,000 reductions in prices, depending on the price point. And that tells me the market isn't supporting it. The other side of this is, look at the treasury market. The bond market will tell you the truth. It tells you how the world feels about the economic conditions. So to give you an idea, the 10-year U.S. Treasury is at 4.7%. Add 200, 300 basis points on that, and that's a mortgage rate. That's what they sort of base it on, all right? Now, take into account your credit score, how many palms you grease, that kind of thing, and maybe you can get a lower rate. But if you have crap credit, and you're trying to buy a house, you're going to pay, 8, 9, 10% mortgage rate. Then take into account all those mortgages. 80% of the mortgages, I think, are below 4%. So that means if I have 4% or less mortgage rate, why would I go out, sell my house, upgrade to another house, pay more for it than I did the house I'm in, and have a 7 to 8% interest rate? No, I'm not doing that. So I'm not going to sell my house, which means the housing market is weak. These are all these things you got to take into account that eventually come back around and affects Nvidia's stock price. Like I said, Nvidia is changing the game and will change the game on how we live. But its stock price is a whole different matter. So is this time to buy? Or is it time to wait, sit on the sidelines, hold your money in a 1 month, T-bill, pick up probably 4% on it on an annual basis? Not too bad, And so I think that's how we have to think more and more right now. A new presidential administration coming in, it looks like they're going to make some big changes, which is fantastic. But remember, we got 14 years worth of crap we've got to unwind to get to normal or to the mean. 14 years, $36 trillion in debt this country is in. Put on top of that consumer debt, commercial debt, and all that, we're upwards of $60 trillion. If the Fed funds rate goes back to 5, if the 10-year goes to 5, which I suspect it will, if not 6, all that debt costs more to everybody. Our government, us, households. These are things we have to take into account. So, bottom line, protect your ass. Don't be a hero. Don't hope. Look at the reality. Look at the ranges. Use our calculations and the price range projections on a daily basis. Use your charts. Learn more. Subscribe to the best U.S. investors. 14-day free trial on the gold and the platinum. Go to the link in the profile. I hope you have a great weekend. Always just remember this. No matter what's going on in your life, always live loud. See ya.